I run Innogwen Insurance Agency, among other things that I do. And today I want us to look at the education policy. Many a times when we talk or we hear about an insurance policy, we think about how much we will have saved at the end of the period. But today I want to talk about education policy, not because it is a saving plan, but because it is a way of preparing in case of an eventuality. If something happened to you today, what would happen to your children? How would your children's education be catered for? And when I talk about something happening to you, I'm talking about if you died today in a road accident, if you died today because of an illness, or you got one of the terminal illnesses and you are unable to carry on your duties, to carry out your ability to make an earning, or if you got involved in an accident and you're permanently disabled, you are not able to go to work and make and bring home money that will ensure your children's education is sound. That is what I am talking about. When we talk about education policy, we are looking at the eventualities, just in case an unpredictable event happens. Like we've been through a season of corona, people have lost their lives. Many of them. What has happened to their children? Put yourself in such a situation. And so education policy is that saving that you put together little by little over a period of 6 to 26 years, preparing for a time when your child will either be in high school, in senior high school, in junior high school, in the university, or when you can also be saving for yourself, because you are looking at tomorrow you want also to go to school and further your education. It is not a savings plan, but it is money that in case I get an accident today, I have saved for 2 years, I have saved for 1 year, and I cannot be able to carry out my duties, I am permanently disabled. The insurance company will waive the premium that I am paying. Assuming I am paying 5,000 per month, insurance company will waive because I am not able to carry out my duties. So I will not have paid premium for a period of time, but I will have, the contract will still be in force. I will still receive that money. The same will happen if on death. If I died in an accident and my maturity money, the sum insured is 1 million. If I died in an accident, my next of kin will be given the 1 million. My next of kin will be given 100,000 to cater for my funeral, or 50,000 to cater for my funeral. And at the end of the policy period, my next of kin will still receive the 1 million that had been initially agreed on, plus the accrued bonuses. If I died a natural death, the same thing would happen. My next of kin will not receive the 1 million instant, but at the period of maturity, they will still receive the 1 million. You don't save because you are you want to keep, it's not that I have contributed 100,000. At the end of the period, I should be able to receive more money because I have been contributing over a period. It is just that in case my life is terminated earlier on, what happens to my loved ones? What happens to my children? But if I also survive up to maturity, the way I have survived, I also took insurance when my children was in school. I received the checks, I paid for their fees, and I also did other things with the money because the checks were done in my favor. And I've been able to be alive. I was not worried that in case I die, something would happen to my children. I was comfortable because I knew that I have taken care of them. And so, I don't know, how does it feel every time you're moving from one bank to another, you're moving from a Shylock to a Shylock, looking for loans to pay for your children's fees, when you can start preparing now, paying little by little to cater for their education in 6 years, in 8 years, in 10 years, in 20 years time, depending on the age of your child. The check is not done in the name of the school, it is done in your name. if you passed on, it will be done in the favor of your next of kin. Jack Ma once said that when you buy insurance, it's not that you are changing your life, but you are preventing your lifestyle from changing. Imagine if I got paralyzed, or I got cancer, I got stroke, I am not able to work for like 10-15 years, and I am watching my children every day and wondering who will pay their fees. But if I had taken an education policy, it wouldn't really bother me, because I would know that come the time of maturity, I am not paying premiums because it's been waived, but come the time of maturity, I will receive payment and my children will be able to continue going to school. Taking an education policy is a wise decision that one makes if you care for your loved ones. Thank you so much for tuning in. Remember to subscribe, to like, and to share. And we are based at Langata, on Langata Road, Outer Village, room 14. You can come, or you can check the contact on the website, on our video, and contact us for consultation and also placing business through us. May God bless you. Thank you.